Now, we have quite a number of types of traders. Now, we have traders that are called scalpers. Now, scalpers, in the sense that they get into the market and then quickly they are out. So they are called scalpers. And they basically, because scalping is a quick and a fast transaction being in and out of the market, they usually use the smaller time frames. Now, mind you, if I say smaller time frames, anytime a trader is saying smaller time frames, is usually talking of time frames below 4 hour, usually. But scalpers use more like the maximum is probably 1 hour or 30 minutes, but they are mostly using 1 minute, 5 minutes, 15 minutes time frame to do their analysis or to trade. So they use the smaller time frames because they want to be in and out fast and make their profits fast. So that is scalpers. The next group of traders that we have are day traders or intraday traders. Now, their name is quite similar to what they do. They trade within the day, basically. So they are not as fast as scalpers, but they are also within the day. So they mostly use the time frames like from 15 minutes, 30 minutes, 1 hour. Usually, day traders use these, and yeah, yeah, they use this, and sometimes they go to 4 hour. There's more like from 15 minutes to 4 hour. That is for day traders mostly. And then the next group we call swing traders. Swing traders because they can be in a position for days. They can be on a trade for days. They are not as fast. Like they don't just want to get into the market and get out within a day. Sometimes it could take 2, 3 days, sometimes week. So that's swing trading. I am more of a swing trader, even though I can also try to do scalping sometimes. But I'm more of a swing trader. I enter the market and then sometimes I leave it to run for days. And swing traders usually use from 1 hour, 4 hour, and then the daily. They are mostly using these three time frames: 1 hour, 4 hour, daily. Now, the last group of traders that we have are positional traders. Now, this batch of traders are more like institutions, banks, hedge funds. Yes, those this group, there are more of these people and or these institutions, and they trade using the daily, weekly, and monthly because they want to be in a position for longer periods, sometimes months, years. So when they get in 6 months, years before they close their trade, and that is positional trading. Anyone can be any type of trader, but um, I doubt if retailers would like to be into positional trading where they leave trades running for months. I think there are only few people that do that, but you can choose to do that if that's is your style or it resonates with your kind of way of life. So mostly the type of trader that you are, mostly because of your daily routine or your life routine. So you choose the one that resonates with you and works well for you. That doesn't put you in stress. So that is the kind that you choose. That is the kind of trader that you choose. You can choose to be anyone, and it wouldn't have any effect. It's basically you have to analyze the charts accordingly and make your trades accordingly. So the type of trader that you are, that one it's up to you. No one chooses the type of trader you want to be for you. You based on your daily routine or your lifestyle, you can choose the one that's best suits you. So that's the type of traders that we have.